Hi there. It's time to look at Dogecoin through the Wyckoff lens and see what the whales are doing with it. Currently, it's trying to stabilize above the red key level of 0.0964. So let's dive into the charts. And if you're new to my sessions, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. These are education content, not financial advice. Dogecoin, as of this moment, is up by 1.5% today, but overall in the entire week is still down by 0.3%. Basically, it's been range bound between the red key level, 0.0964 I mentioned, and the orange key level of 0.1112. It is still in the early stage of the paper hands diamond hands testing period. So that's what we call accumulation cycle in Wyckoff. Okay, it's basically going through these kind of roller coaster ride. The whales are trying to check out the paper hands. Whoever bought the dip, the whales let them ride up just to let the price drop and check them out once again. So you see this over and over. Sometimes the roller coaster ride goes for quite a couple of months or even a year or two. Sometimes it just lasts for like 2 to 3 months before it gets into the next distribution. So if you have been following my other sessions, you have heard me said some of the altcoins has been in this ride for over a year. All right. It's not that we have just started the bear market or, it's different for different projects. For the case of Doge here, it's still early. It has just gone through the panic over stage back in December around Christmas. And now we are at a stage where it is trying to stabilize above the level where the October 10th announcement last year challenged. If you look back to Doge, it's actually also around the lowest point of the 2024 fourth quarter. Third and fourth quarter. That's where the low was. At one point, the price went deeper than the purple key level of 0.0857. So don't be surprised if it comes back down again. It already tested that level 2 weeks ago. Don't be surprised if it comes down to test it once again. If you look at what happened over here in 2024, the first time it broke the red line was in July, and then a month later, it tested the second time, and another month later, it tested the third time. We have gone down for 2 weeks. I would consider that the first time. So if the second time and the third time count, then it's something expected. Okay? What if you say, would it go even further? Look at what happened over here back in 2002, 2003. What I call the Ice Age period back then. Okay, that's like a 2-year-long accumulation. We may go through the same period. Okay, if you believe in the 4-year cycle, 2022, it came to more or less the bottom. 4 years later, we're in 2026. Exactly 4 years later. Same beginning of year, middle of year, getting to that range. So is it going to stay for 2 years until the next term of the U.S. Leader comes in? Time will tell. But certainly it is going through the accumulation and expect the roller coaster ride, the check out by the whales to check out the paper hands, leaving only the diamond hands will continue. And this may not be the lowest point. Okay. Just to let you know the potential downside risk. Positive thinking is that in order for us to get a confirmation that people are willing to get back to Doge or get back to risk on mode again, the first signal we have to see is a bunch of white candlesticks stacking up with higher than average volume, challenging this light blue key level of 0.149. This was where January or the last week of December challenged. That's the trading range top for the accumulation cycle. We call that the automatic rally. Okay, so that confirmation has to come as the very first step. If you look across here, it happened here back in September 2024. It retraced a little before it shoots to the distribution top. All right, you can say it went to the moon, and then now it's descending back to the earth. So same thing over here. It had the sign of strength, and then retraced, and then shoot up. Okay, so it happens very often. And that's the key point. If you see this kind of rally with sustained volume, don't expect it's going to go up straight. A lot of times, there will be sideways trading or even pullback, deeper pullback before it shoots up. Some of the deepest pullback can go deeper than the previous testing levels. Those we call the spring, the mega shakeout. Okay, sufficient of big picture. The micro view, like we discussed, I said last time, by February 18th, 19th, we'll get a confirmation whether the price is going to follow the downtrend, continuing with the downtrend, and we get that confirmation on the 15th, just 2 days ago. You see this long wick from the top. Okay? When the price tried for 2 days to go above the orange key level of 0.1112, get heavily rejected by the bears. Look at the volume bar over here. It basically negated whatever happened on Saturday, the Valentine's Day. A romantic price surge and heavily hammered afterwards. So we're back to a stage where people are waiting for economic data. You see these dots over here. Economic data is going to come out in the next 3 days. That's going to change the game. And it is going to be a very stretched target by tomorrow or today, your time, if you are on the east side of the globe, for the price to go break the ceiling of the downtrend. All right, this has definitely passed. We can remove it. So next days, if the price isn't going to break this by the 18th and continue to trade sideways along this triangle, we probably have to wait till the end of the month or even the first few days of March before we get the confirmation that the downtrend is over. Still, it is trading on the stronger half of the channel. That's the positive side of things instead of the weaker side for most of the fourth quarter last year. All right, we're getting close. Just the signal hasn't arrived yet. If you are interested to access these sessions 2 days earlier, join the channel membership now. Here's another analysis for you. Thank you.